The US Federal Reserve, the powerhouse of the global financial system, has been tightening interest rates to control inflation. As a result of this, stock market valuations are crumbling, sends ripples through financial markets, driving energy prices up and investor confidence down. Overvalued tech stocks are now tumbling, taking portfolios down with them. Emerging markets worldwide are also feeling the pinch. The soaring dollar is wreaking havoc. The question isn't how much has already been lost, it's about how much more might be at stake. The global markets are bleeding and there's no telling when the hemorrhage will stop.
The S&P is down 3% today and has seemingly fallen off of a cliff.
Welcome to the investor's nightmare, where dreams of wealth are unraveling into tales of despair. Today, we'll explore the chaos unfolding in global markets, the reasons behind this turmoil, and what it means for your investments. It all begins with the central banks.
As of a few hours ago, the Federal Reserve decided to cut interest rates by another 25 basis points.
The US Federal Reserve, the powerhouse of the global financial system, has been tightening interest rates to control inflation. While this might sound like a responsible move, the reality is far harsher. Higher interest rates make borrowing more expensive, slow down business growth, and limit consumer spending. Promises of relief by 2025 that started to look like a wishful thinking. The message is clear: borrowing is no longer cheap and the days of easy money are over. As a result of this, stock market valuations are crumbling. The S&P 500 and other major indices have been precariously perched on overinflated optimism for too long. The correction that everyone feared has arrived, and it has dragged portfolios and investment accounts into the abyss along with it. It's not just economic policies that are causing havoc. Geopolitical tensions are adding fuel to the fire. Wars are raging, economies are trembling, and investors are fleeing in panic. The Middle East, a region critical for global energy supplies, has become a ticking time bomb. Each escalation sends ripples through financial markets, driving energy prices up and investor confidence down. The fear in the air is palpable and assets are being sold off at alarmingly low prices as the risk becomes the new enemy.
There is a bit of a catch. Despite the stock market, housing prices, and Bitcoin recently reaching brand new record highs, experts are beginning to warn that we've officially entered bubble territory.
Before we continue, you tell us how your portfolio is holding up in the comments below. Tech stocks, once the poster child of growth and innovation, are now at the heart of a massive bubble. If you remember the dot-com crash, today's AI-driven hype will feel eerily familiar. While the promise of AI is enormous, many companies are struggling to convert innovation into actual profitability. Overvalued tech stocks are now tumbling, taking portfolios down with them. Even markets that were considered bright spots aren't immune at the moment. India, often seen as a rising economic power, is faltering under the pressure.
From India, where the markets had a terrible Tuesday. Stocks crashed today. There was widespread selling across major sectors.
The Sensex and Nifty 50 indices are declining.
India's currency, the rupee, is also under pressure.
And the rupee has plunged to an astonishing low of 85 rupees to the dollar.
Let's show you the numbers, starting with the Sensex. It tracks the top 30 companies of India. The Sensex plunged by over 1,000 points today. The Nifty was in the red too. This index represents the country's top 50 companies. It was down by over 300 points.
Foreign investors, spooked by global instability, are pulling out, leaving destruction in their wake. A strengthening US dollar is making Indian investments less appealing, and a combination of inflation and trade deficits is exacerbating the problem. Emerging markets worldwide are also feeling the pinch. The soaring dollar is wreaking havoc, making imports costlier and fueling inflation. Economies that were once stable are now struggling to stay afloat. Even reliable currencies like the rupee are weakening, joining a growing list of casualties. So, what lies ahead? Recovery may be a long way off. The global economy is grinding slower by the day, burdened by rising debt, widening trade deficits, and relentless geopolitical unrest. While markets might eventually rebound, it won't happen without more pain and losses. The question isn't how much has already been lost, it's about how much more might be at stake.